Hello everyone, welcome to the Fundamental Analysis tutorial series for Forex traders. We are going to talk about a new topic today, so let's get started. So today we are going to talk about a very important concept in Forex trading, which is called market sentiment. So what is market sentiment? Market sentiment is the combined feeling that market participants have when they are operating in the market. It is the dominating emotion or idea that the majority of the market feels about the current direction of the market. Having a sentiment based approach can help you decide whether you should go with the flow or not. But along with the sentiment based approach and combined it with the sentiment analysis with the technical analysis, you can come up with the better ideas for your trading. In stocks and options, traders can look at volume traded as indicator of sentiment. If a stock price has been rising but volume is declining, it may signal that the market is overbought. So let's see what is a risk off. The term risk off is used to describe the risk sentiment where traders and investors in the financial market reduce their exposure to risk and focus on protecting their capital. This happens when market participants are pessimistic about the outlook of the economy and they are expecting some unexpected news that is super negative or increases uncertainty about the future. Typically, in a risk off environment, you will notice safe haven assets such as Japanese yen and gold they begin to rise, and in high risk assets such as stocks and commodities they begin to fall. Now we discuss risk off. What is a risk on? Risk on when market participants are optimistic about the outlook of the economy. They will build up the price of riskier assets. That is called risk on. When you hear that traders are in risk on mode, this generally means they are buying risky assets, usually with the leverage. And combined risk on and risk off is also known as RORO. Now, what are the typical risk off assets? We have stocks. Stocks suffer across the board, and a good indicator is to look at US stock indices like S&P and Dow Jones and see if they are all trading lower to confirm just how strong the risk of sentiment is. Risk of assets would include US treasuries and German bonds because both are seen as almost risk-free. And then we have currencies. Among currencies, the US dollar, Japanese yen, and the Swiss franc tend to rally as traders unwind carry trades. And trades are those trades in which Japanese yen is borrowed at a low interest rate and then used to buy higher yielding, riskier assets in other markets. And then we have gold and risk off assets. Prices of gold usually rise and yield on government bonds drops. Risk on assets. Let's see what are typical risk on assets. We have stocks again for stock traders, stocks in industries that are more dependent on economic growth. We have bonds for bond traders, lower rated but high yielding corporate and sovereign issues are considered risk on assets. And then for currency traders, commodity currencies such as Australian dollar, New Zealand dollar, and Canadian dollar are typically the risk on assets. And we also have commodity traders, industrial metals like copper and energy products like oil that we see in the risk on assets. So, what are safe haven currencies? Safe haven currencies are currencies that are expected to retain or increase in value when it seems like the world is about to end or there are some very severe geopolitical economic situations. We have US dollar, Japanese yen, and Swiss franc as safe haven currencies. When there's a lot of uncertainty in the world, there is a lot of uncertainty in the economic market, there is usually a flight to safety to one of these currencies. So investors tend to go after these currencies when the economy is going down the drain or there is some severe negative consequences in the market. Safe haven currencies, there are fundamental two reasons why we define them as safe haven. Number one, the country or region should own a large amount of foreign currency assets, meaning they may sell those foreign assets and bring money back home when volatility picks up and risk markets are weak. Reason two could be forex traders, knowing that certain currencies have strengthened in the past during times of risk off, may buy those currencies in anticipation they would react in the same way as they have done historically. So let's talk about safe haven currencies and their strength. For example, US dollar strength, what does it mean? Strength in the US dollar is an indicator of risk off sentiment. If the US dollar is stronger against high yielding currencies, markets are likely not happy about recently released economic data or news. Foreign investors may also be looking to buy US treasuries as a safe haven, and in order to buy those, you need US dollars. And if you don't have any US dollar, then you have to buy some. When lots of investors do this all at once, this causes US dollar to rise and gain strength. The other safe haven currency is Swiss franc. The Swiss franc is another currency that is considered safe haven currency. This is mainly because of the political stability, strong fiscal policy, strong monetary policy, stable economy of Switzerland, and international investors return to CHF as safe haven in times of crisis. So if the Swiss franc is stronger against high yielding currencies, it means there is an indication of market disturbance, that something is going differently in the market. And if that's the case, then currency traders will flee to the perceived safety of CHF, and such price action from CHF would indicate a risk off environment. Another safe haven currency is Japanese yen. Strength in the Japanese yen is another indicator of risk off sentiment. If the Japanese yen is stronger against high yielding currencies, it's an indication of shift to the safe haven for the Japanese yen. We can also see that as some indications like sudden drops in Australian dollar JPY pair and New Zealand dollar JPY pair, that they signal risk aversion. Rise in Australian dollar and JPY and New Zealand dollar and JPY indicates that the risk sentiment has shifted back to risk on. Safe haven currencies, we also label them as risk on, risk off, and according to RO, safe haven currencies will strengthen in the risk off periods. All right, guys, thanks a lot. This is about it. See you next time. Bye bye.